And what's going on, everybody? This is Dan French. This is the French Wrap for the week. Real estate financing is what we talk about a lot on this show, but this is really everything Las Vegas. And so I'm going to talk about what's happening in the markets this week and wrap this up and give you guys my opinion on where I think things are headed. Also, we're going to talk about Bank of America rolling out a new program. We'll talk about that and some risks that's involved. And also pessimistic people, Americans out there being very pessimistic about buying a home. We'll talk about numbers on that and go over all this information. So if you guys don't know, I've put out a lot of videos, and it's been a little bit of time since I put my last video out, but I am a real estate agent out here in Las Vegas. I would love to work for anybody out there that's looking to buy a home. And I would, like I said, love to roll up my sleeves, work hard, and earn your business. And one of the things I wanted to bring up is, here is my website, right? So this is lvhomeprofessionals.com, and this is a great place if you want to put any information in here. You can go here, you can look at my website, pull up really anything. I mean, these are high-end homes, right? But you can search any home that you want at any price range, and you can get started there. And that would be a great place, right? So let's get back into this. I want to talk a little bit about what's happening out there in the markets and really what's going on with real estate and the mindset people are in. So the first thing I want to bring up is pessimistic buyers right now. You know, there's a lot of people that I contact or even contacted me, and they start with the, they start with ambition, right? They're out there saying, hey, I'm all focused on this. I want to do this. And I don't know if it's just maybe something triggers these people out there that are looking to buy a house. They contact me and say, hey, let's get a search going, right? Let's look for some properties. Let's put some things together. And potentially if I see something, then I'm going to pull the trigger and I'm going to go ahead and make an offer. And so I got a lot of people doing that right now, but then they take one step in and then one step back. It's like, okay, wait a second. The market's starting to shift. I think a lot of people know that, but I think that they're looking for that deal, right? Or just, hey, you know what? There's no sense of urgency now because this is a completely different market. We know now this has transitioned to really a buyer's market. And so they're still pessimistic, though, on is this a good time to buy? Because primarily its mortgage rates are high. The national average is over 6% still, or right around 6%. And then even though prices of homes, especially here in Las Vegas, right now there's about 2.5 million homes across the country. Homes here listed overall is over 11,000 now. People still know that these prices of homes are high. We've come down a little bit. We'll talk a little bit more about that in the end, but 8%, right, is all we declined. So people out there are thinking, well, is this a good time to buy? Is it not? So the consumer index from Fannie Mae, which is a government sanctioned enterprise, has come out and stated that over 70% of Americans are saying it's not a good time to buy a house. Very pessimistic on this, on buying into a market today. And then the other side of it, you flip that other side over and you say, hey, 35% of sellers that are selling their house are saying it's not a good time to sell their home. And I understand why. You look at it, that index is down 13% year over year, which shows that people just have lost confidence, right, in buying. Doesn't mean they won't buy altogether, but I feel that focus and that scarcity and that supply and demand thing that was going on last year is something they don't have to worry about or focus on, because now they know properties are going to be on the market. They know everything's on the table with sellers too. Sellers are willing to provide closing costs. In some ways, they're going to even say, hey, you know what? We're not getting any offers. We're going to go ahead and, give you more money for buying your rate down. And so I think buyers out there are a little bit just hesitant on doing anything right now. So a lot of people that are contacting me with that 1 foot in, 1 foot out, they'll contact me, put them on a search. I won't hear for them for 2-3 months. And then they'll be like, hey, what about this house? And it's almost like they're just dabbling into the market, but they're not 100% vested into buying a house. It's more of, is there an opportunity? Am I going to get a good deal? Should I wait until this market really gets down to its levels of where it needs to be before I start to go in and buy this house? Looking at Goldman Sachs, they're saying it's going to be 22% decline this year in home prices, right? And hey, you know what? That's fine. And overall, they're saying that they're going to see that home values are going to continue to drop, and they're going to continue to drop into next year, 35%. So total, right? 35%. So that's on the table. They're saying that maybe 2023, it's going to be another 8 to 14% drop in home values. You look at home values today, we've lost, like I said, 8% on what the average list price was going for, and people selling or what's been sold is now down to 450. So all of this information is great because I think Goldman Sachs is saying, look, we're going to still decline more, and this is going to continue to happen into 2023. I feel like it's going to get worse before it gets better. So what people are thinking right now is that we still have to raise the Fed's fund rate, right? Potentially it's going to happen in September. We all know it's going to happen. The European Central Bank has already raised their rate by 75 basis points. Everybody knows that the Fed is probably going to be bullish here and raise it another 75 basis points here. So what does that do psychologically for people? Well, if you're looking at the fourth quarter and buying, sometimes that's a great opportunity to buy a house, right? Sometimes it might not be, though, if you're somebody out there that the type of individual or type of party that I'm talking about where you have that 1 foot in, 1 foot out, knowing I have options. I have no sense of urgency, which is completely fine. And you're also looking at this going, maybe I'm going to buy a home in the long term because next year it's even going to decline more. Now, if you flip that and you say, okay, well, maybe that's not a good market for those people, but first-time home buyers, right? First-time home buyers may have this opportunity where they come in and they're going to buy into a market where they're overpaying a little bit on a house that maybe they thought they would, but do they know that, right? They're a novice. They're not in the markets. They're not watching data. And I think they got a lot of push from people outside, like, family and other people. Hey, wait on this. Don't do this. Shop this, whatever. The point is there is no real right time for a home buyer, a first-time home buyer to buy because they're just trying to get into something. I think when you're looking to buy a house as a first-time home buyer, you're looking at the cost of shelter and the capacity of debt that you pay into that shelter, right? And so I think when you look at these first-time home buyers, I don't think they're looking at such a market where it's like, well, rates I need to wait till they get down to 3% before I'm going to pull the trigger and buy a house. It's more like, you know what? I'm renting right now. I just need to get my foot in the door onto something. I want to have a fixed payment, which I can sleep better at night. And I think a lot of first-time home buyers that were not in the market because they were being pushed out from other investors and also other people buying homes, let's say when the market was low, low supply, high demand, you had a lot of people that were willing to go and offer above list, which really pushed those first-time home buyers out, a lot of them. So now they're back in the market, and I think those are the type of buyers you're really looking at buying homes today, and I don't think they're going to so much look at, hey, you know what, is this the best time to buy a house? We all know it's not the best time to buy a house. You have prices that are high and rates that are high, right, and higher than they normally have been. So we know that people are a little bit pessimistic on this market. Now, also on builders, I want to talk a little bit about that. Builders have this 2-1 buy-down program that offers where you start off with a lower rate and it adjusts until the third year when it matures and you get the higher rate. You're still paying for that as a consumer. You have to buy the rate down or it's a discount. Now, what a lot of builders are doing, they're throwing huge incentives, right? Huge incentives, $40,000. I was at Century Communities, and they're giving this to buy the rate down. I've seen builders buying the rate down to 3.99%. So there's a lot of things happening right now, which is making a lot of people kind of take a step back. First-time home buyers are probably all in because they just need to buy a house. But if you're in a house right now and you're looking to sell your house, where do you go, right? Where do you head after that? Like, if you have a higher rate and you're getting relatively the same home, does it make sense to sell? And then you got to also deal with buyers coming in asking for real low-ball offers, including sometimes asking for closing costs and extra money to buy your rate down. It's a tough position for a seller. Now, I want to go over here. Let's go and take a look at Bank of America. And Bank of America has come out with a new program. Bank of America is launching a zero-down mortgage payment program. Not having down payment funds is a barrier to home ownership for many. One lender is making loans with no down payment increasingly accessible to borrowers. Bank of America's community affordable loan solution will benefit aspiring first-time home buyers. Now, what is this? It's a zero down, zero closing cost program with no FICO score required. Now, a lot of people are saying, wait a second, wait a second, isn't this going to be the 2008 market all over again? Well, I think there's a good and bad to this. Now, we know the Fed's going to raise the Fed's fund rate, and they're going to raise it 75 basis points at the end of September. What is that going to do to the economy? Well, it's going to slow the economy down even more, inflation, right? And what the Fed's agenda is to increase unemployment. So the risk here is Bank of America is trying to still stimulate business, right? By saying, hey, we're going to take you on and take on that risk. But what if you lose your job? Now, is it a good reason not to pay your mortgage? Sure. If people can't pay their mortgage, they may have loan modifications or programs that you can go through. But if you don't pay your mortgage because you don't have a job, that's a risk for Bank of America to give a loan to somebody that really has no skin in the game. And so I think that's an issue that people have to look at because, yes, it's great. I don't think you look at a house as an investment like Bank of America is stating here. You look at it as it's the cost of shelter, just like I said, and the capacity to make the payments so you can sleep better at night. And you may pay yourself forward down the road, but you don't look at this as an investment. Now, do I think that this is going to have a negative output or a negative impact on where things are at today? I think if people start losing their job, because I think that's the final sector before I feel like we're really in a recession at that point, then I think, yeah, it would have a negative position, not just for Bank of America, but for lending in general. And they may, potentially default on these loans. This is a risk. Now, it's not the same, though, as 2008 because we still have credit worthiness of buyers at an all-time high. They're offering this program. I don't know how many people are really going to take advantage of this program. Now, if banking institutions across the country started to do this, yeah, then this might make a different, we might have a different topic here. But stated income, things like that, and back in 2008, this is a little bit different. They're still checking income. They're still making sure that you can afford this. Now, I think, too, you look at where we're going and where we're headed with this market and where people are at today. I think, like I said, the pessimism that people have in buying, this might give them an opportunity to say, well, this is what I think Bank of America is banking on is, well, you know what? If I have to put money into something, I don't know if I want to do that. But if I have to put nothing into it, man, Bank of America is the one that's taking all the risk. This could be a lose-lose situation. I think it's an okay program, but I also feel that there's a lot of risk to this. And it's going to be very interesting to see what the outcome is, right? What people actually, how they deal with this and how Bank of America deals with it. It's a good opportunity, I think, for people to kind of test the waters. But I'm not a fan of just not having money into nothing, into something like a house, right? I mean, the first thing that's going to happen is if something where you can't pay your mortgage or let's say that you lose your job, you're going to just walk away with this mortgage because there's no skin in the game. So I think that's a risk for everybody. I also want to bring up, let's go move over to this, is home ownership, right? And equity position that people have right now. It's very high, right? You can see it actually, it's over the amount of mortgage debt. There's more equity in home ownership right now or owning a home than there is outstanding debt. So people are in a good place right now financially for the most part. I'm not going to say everybody. I'm not going to sit here and say that I'm speaking on just the data and the numbers that I see. But I think right now you see a lot of people have equity. They're taking out HELOCs if they needed to and, repositioning, paying off that high interest debt and pivoting, right? They're repositioning their place where they have their payments going out. So they're using the equity to their advantage. So I think that's one thing of why people are staying put is because they have a ton of equity. And then the other thing, too, is you look at this percentage from Fred, which is mortgage debt servicing payments as a percent of disposable personal income. It shows that the average American, for the most part, again, I'm not going to say this for everybody, but they have disposable income. They're not living paycheck to paycheck for most. Now, there's some out there that are, so I'm not going to sit here and say, okay, well, this is everybody. But what I am saying is that on this graph, it's stating that people have maybe repositioned or positioned themselves better and they have some savings, maybe they have some money, or they don't have a high amount of debt that they're paying every month. Now, the other thing too is people always say, well, what about bankruptcies, right? Where's the bankruptcy numbers and where is also foreclosure numbers? And are we going to start to see more foreclosures happening here in the markets? Well, you can see here the blue graph or the bar you can see up here is where the foreclosures are at. you can barely see an uptick over the last few years. You know, when we had 2008 and 9, you see that line that goes almost completely straight up. That was in 2006, 7, and 8 when people just walked away from their home. Again, this Bank of America program, if that happens again, if everybody started to do it, that might raise a red flag for me, because now it's like, okay, Bank of America, all these institutions are offering no skin in the game to these buyers. So if they decided to leave, you know, what are they really risking other than the fact that they had their credit get hit, right? So you have to look at all those things. And I think that right now, yes, it's okay to be pessimistic, but the people I'm looking at and focused on and working with are the people that are probably looking at first-time home buying. Sellers out there, they have to be realistic. If they have a need to sell or a want to sell, and they just, you know, they're in a position where they don't have wasted time that they can utilize, then I'm going to say that those sellers are really the ones that are really lowering their price of their home, and they're getting it sold, and they're even offering these closing costs sometimes, you know, offering even buying down the interest rate for the buyer, just because they know rates are really the big thing out there. It's a big elephant in the room of why people aren't buying, because you combine that with high prices of houses right now. It's just tough. So if you're a seller out there, and sellers that I have, the ones that are sitting there, days on the market, 30, 45 plus days, it's just they have no motivation to sell. There's no reason for them to take a loss or reduce it. And then it takes time. You know, the market always dictates what the value of your home is worth, right? Depending on what people are doing. If you're not getting any offers, that tells you right there it's just overpriced. So if you don't want to lower it, then that's fine. You don't have to lower it, but that house will be sitting. And the ones that are more aggressive, the ones that are listening to me or listening to agents out there, those are the ones that are going to get sold. Also, too, the sellers that need and are motivated to sell because they have to get out of that house for whatever reason. Maybe they're buying a new home and they need to sell that house. They need proceeds, whatever it is. But those are the ones that are selling quickly in this market. Now, let's go over, I want to talk about what's happening here in the real estate world. So here you could see, let's kind of start off here. The average sales price is $450 now. All right. Now we're down. Our highest was $481, and this is single family residence homes. Right now we have over, I think it's 8,700 homes right now for sales for sale, single family residence homes. And so we're about 8% down. And then you got new listings. We're down 42.69. Now, why did this happen in June? Well, we know that rates started to really creep up right here. And people just started to say, you know what, I'm not going to buy into this market. It's just too much. And also, I think psychologically, sellers know that if they put their house in the market, it's just going to sit. And if they have a specific number or a desired number of trying to get, buy into or to sell their house to get a profit, they're not going to put their house in the market. So they probably just are saying, you know what, let's wait to see what happens. Probably if rates come down, they're going to maybe put that back on the market. But right now we're at 42.69. Like I said, 2.5 million homes across the country right now that we're looking at. Homes for sale. So let's talk about 8794. So 8,794 homes, single family residence homes on the market. If you want to go all, we're at 11,583. Okay. Now you also have closed sales. All right. So we have 2016. You can see that the closed sales is declining significantly. Days on the market, 17 days. But if you look at the average days on the market, we're at 25. So we're still below 30 days on the market. And you look at some of these markets, a lot of markets, people think that 30 plus days is actually a normal market. So we're still selling pretty quickly here in Las Vegas, but it has definitely gone up and we needed that. Month supply, we're at now 3.2 months. Builders, like I said, they're offering everything. Builders can't sell homes. They have grand openings consistently. Now, desirability, if it's Summerlin, maybe it's in a location, maybe it's a 3-story, went out to Blacktail, they had 5 homes they sold, okay? But what was the price range on that? 500 to 600,000. You see anything over 700, 800,000, brand new, good luck. You know, I mean, I think a lot of people out there, you got to find that right buyer, but that 5 or 4, I would say 4 to 700 range, that's selling, especially if it's in Summerlin. But these new homes, a lot of these new builders, they're trying to give everything they can away. Discounts, huge incentives, buying the rate down 3.99%, whatever it takes to get people into a house, they're trying to do that right now. Percentage of price list price is 99%. So let's go over here. I want to show shows to pending. So I don't know. We can take a look at that. But I think we've went over most of the average square foot of a house right now. Is the median price point is 254, and then the average is 261. So that's definitely dropping. But I feel like we've went over everything that we needed to go over. One of the things I do want to bring up here is, let's go back to this, is you can see that we do this on a 7-day average as well. And if you look at the median price, the list price is 450. Now the close price was 450, right? And so you're seeing this drop. Now I always say, you know, where do we see this actually ending up? Well, like I said, Goldman Sachs said values will drop 22% into next year. They're going to say maybe another 8 to 14%. So where do I see Las Vegas, let's say, you know, at the beginning of 2023, the end of the first quarter? I wouldn't think it would be unrealistic that we're at like 415 for the average list price. You know, it's dropping like that. Now, is it dropping, you know, at record pace? No, because I feel like people still want to buy in Las Vegas, but we're down 8%. So where do I feel like it's going to be? I think it's going to get worse before it gets better. Like I said, the Fed's going to raise the Fed's fund rate for the fourth, you know, heading into September. And then the fourth quarter is going to be very slow. Now, this could be a great opportunity for you to buy a home if you're out there as a buyer, especially a first-time home buyer. Why? Right now, you have a ton of properties, but people want to, sometimes they don't, you know, if they're listing their home and they want to move, sometimes they want to get out of that home. There's not as much competition even for that. We know turnkey ready homes are really desirable, you know, and people, they're still getting maybe 1 or 2 offers on those because they're just turnkey ready. They have all the upgrades. So this might be an opportunity for somebody out there during those times, because it's typically slower. I know it's slowed down significantly, but it's typically slower into the fourth quarter. I think this is really going to be slow, and I think it's not going to really pick up until the start of the second quarter of 2023. But if you guys have any questions about what's going on here in Las Vegas, for me as a real estate agent, I'd love to work for you. And I would, like I said, I would roll up my sleeves, work hard for you, and we'll get you into a house if you need it. If you want me to sell, I'll give you the pros and cons, and I'll represent you well. My name is Dan French. This is The Sound Off. I will see you guys at the next one. I'm out of here.